Hi, fellow traders. Hope everybody had a great day today. I'm going to recap my day here in a minute, but I have a very important announcement for you guys. So, attention, all Kmart shoppers. Your bad trades give you all the knowledge that your books can't. Let me say that again. Your bad trades give you all the knowledge that your books can't. Now, you could change books for any type of passive education, like videos, you know, um, your online classes. All of that stuff could be put in there. And I know what a lot of you guys are thinking. I've been doing this for 2 years. I've got a ton of bad trades, and I still haven't learned a damn thing. And, the reason why you haven't learned a damn thing from your bad trades is that you were never taught how to look at your bad trades in a way that you could learn from them. And that's what we've been doing the last couple of weeks in our roadmap to success. So you guys, that was a head fake. What I've been teaching you the last 2 weeks in the roadmap to success is how you learn from your bad trades. The mistakes that we make trading, we learn far more from that than our good trades. So, for example, let's look at this trade today. Now, this is a textbook opening range breakdown trade, and let's say I was teaching you this strategy, and I could teach you this strategy in 15 minutes, and you could think, I got this. This is so simple. I got it. I can trade this. Because all you have to do on a 5-minute opening range breakout, you mark the high and low of the 5-minute opening range. When it breaks the low, you get in. You get short. When it breaks the high, you get long. And then you just take off at your profit target or wherever your stop is set. You stop out if it hits that. But it's just that simple. And I could teach you this in 15 minutes. I just taught it to you in less than 5. All right. But there are some little, idiosyncrasies about the setup and little changes that you're only going to learn through doing. You're only going to learn through actually trading and implementing the strategy in a live market. That's the only way you're going to learn. For instance, this candle, the lower wick is longer than the body. So in that case, we go with the body. So we're going to trade off the 5-minute opening close. And here is a close. Here's the entry. This is where our risk is based off of the opening range low. And we hit our first target. We take profit. Our stop will be up over here. To break this high will be our stop. Just that simple. And looks easy to do, right? It looks really easy to execute this strategy. Get in on the break. Our stop is up here. Our profit target is down here. Wherever we set it. And that's all we need to do. And on a dead chart, it looks really simple. But what happens when you're trying to execute this strategy in a live market where the candlesticks are actually forming and you're watching the price action? That adds a whole new element to it. And that causes people to be very emotional watching that price action. You know why? Because price action is basically human emotion. That's what we're trading. We're trading other people's hopes and dreams and their beliefs as to where they feel the stock is going. That's what we're trading. So we feel that. And the price action, it doesn't stop. We can't pause it and decide whether we're going to get in and then start playing it again. It doesn't work that way. So having to, having to trade this action on a live market is the only way to learn this strategy. And it takes you a lot longer than 5 to 10 minutes or 15 minutes to learn how to execute these strategies. It takes you, because these trades are going to set up different. The first 5-minute candle is going to print different for every trade. It's not going to look the same from trade to trade. The second candle that starts to print, it's not going to look the same. It's not going to move the same. The markets that we trade in are going to change. And you're going to have to experience all of that during this learning process. And through this process, you're going to make mistakes. And so learning from those mistakes is going to be what's key. And so you got to use the procedure, everything that we've learned in the last 2 weeks about reflection and journaling, that's the head fake, guys. It's the head. Everything in that is about helping you learn from the mistakes that I know you're going to make, and that you should know you're going to make. But it's going to teach you how to learn from those mistakes so you don't continue to make them over and over and over again. And one of the main reasons that I stream my platform live every day is not to embarrass myself in front of you by making a bunch of mistakes every day, or when I do make mistakes. It's to show you that these strategies are going to look different every day. The setup's going to look different. There's certain things you're going to have to look for on this trade that's not existing on that trade. And we learn from this process. Now, the roadmap we started, when you learn this strategy, you learned it as basic as possible with a trade plan that you didn't even have to think through. You just executed. And now we've added elements to it. We've added the pivots from the daily chart, the daily levels of support and resistance. We've added the moving averages. We've added some elements to this chart to help us make the best trade plans. And so we can build a trade plan specific to each stock that we're going to trade, because each stock is going to trade differently. And that's one thing you should have learned in the process through the exercise, is that these stocks trade differently. They're going to look different. And all I have to do is implement my trade plan. Don't worry about how differently the stock moves. Don't worry about if it goes up and then comes slamming back down and goes up if it's choppy. Don't worry about all of that. You just observe it, see what it does when it starts trading like that. So when you see it enough times, you're going to form a hypothesis on what the stock's going to do when you start to see that price action, and you'll be able to make decisions based on that. But it's all about taking your bad trades, the trades that you made mistakes on, running them through the process, running them through the wash, and taking what you need out of it, so that when you start to, your learning process the next day, or you implement what you've learned the next day, you're going to have it, down. It's going to be written down. Like when you write it down, you bring life to it. It means something. All of a sudden, it's awake, it's alive, and it's a part of you. If you don't write it down, it never becomes a part of you. It never becomes ingrained in you. And you end up making the same mistakes over and over and over. And you can't figure out why. And somebody asked me in chat today, if I've ever had to tell somebody that they probably need to stop trading because I didn't think it was for them. And honestly, I have. I've told several people that, because they refuse to do the work. They refuse to learn from their mistakes. And if that's the case, you're just going to continue to give money away. The best thing for you to do is quit. I mean, it'll be smarter just to take your money and play the lottery. You have a better chance of winning that than making money in the market. So that's how important actually in the learning process, actually trading in the market. Not playing games, not playing a challenge, actual live trading. I don't care if it's with 50 shares, it doesn't matter. At this point, you're learning. You're not trying to build your account yet. You got to put those 60 hours in, like I said. Once you get those 60 hours in and you gave it the best effort, you're gonna be in a position to start looking at making these trades to grow your account. But when you first start, your number one focus needs to be on learning, and learning from all of the bad stuff that you do. That should be your number one focus. All right, so let's take a look at my trade from today. Again, this was a opening range breakdown. I used the body because the wick was longer than the body, maybe by a little bit. It took me a minute, a quick second to analyze this, which is why this was a little bit late getting in, but only by a few ticks. But we got this, and this was the 52-week low. This is what it looked like this morning. We was trading down here on the gap down on earnings, and we were really close to the 52-week low. And I knew it. I love these trades because once we test it and bounce, and if we get back below it, we're gone. Now, sometimes we test it, like here we set the 52-week low. Here's where we tested it. This is from another gap down here, right on this 52-week low. And then we bounced off of it. Here, we kind of bounced off of it again. Once we break through it, we test it and we break through it, look out. Did I expect this huge of a move today? No, I didn't expect it. But I was able to capitalize on most of it. And this, my friends, is my ideal trading day. This is what I look to do every day. Okay, I look to do this every day. Pick one stop, nail it from the open, and ride it all day. I reduce my risk. I'm not chasing everything that moves because somebody said this or somebody said that. That's what this is all about. So we saw that move, and I'm like, look, we get through this. I love it. We're done. So as far as targets are concerned, once we hit a 52-week low, the only thing I can use is whole and half dollar marks, and in this case, $quarter marks, because they actually came into play. And if you guys were paying attention to me through this trade, I was showing you on level 2 and time and sales what it looks like when we hit support. And we know when we hit support because of looking at level 2 time and sales, looking at the price action. That tells us it's hitting support. But automatically, I just picked the whole and half dollar marks and eventually the $quarter marks. So I got in at 26.25. My first target was 25.50, but kind of got a little itchy trigger finger. It got to 56, so I killed, it didn't really get down to 50. It was struggling to get there. You guys know what we were looking at. So I ended up, taking it off at 56. It just didn't quite get to where I wanted to. And we saw this support. It's support that came in that started to push this thing up. That's what I felt. And that's why I took it, when I did. I just didn't leave it at 25.50 and said it's either going to hit it or it's not. within 6 cents is well within the range, acceptable range. Then the next one was at 25, but I put it at 25.05. I set it at 25.05 because a lot of times it may not hit 25. It'll get to 25.01, 25.02, but never hit 25 and fill my order. So I went with 25.05 on the second one. It worked great. We had the bounce. And here's where a lot of professional traders will add. You know, they'll add here. They'll add here. They'll add here. And then they'll start scaling out once, you know, we get a defined bounce. I'm not, you know, maybe one day I'll be at that level of comfort, but right now I'm very comfortable doing what I'm doing. So I'm, you know, withstanding these pullbacks, being patient and waiting for it to hit my target. So my targets were $half marks here. Half and whole dollar marks. So the last target was at 24. And look at this. This thing washed out without me still being in the trade. Now here was another entry point that I missed. I could have entered here. And, well, wait a minute. I'm sorry. I was in here. I just didn't take profit here. This thing, I didn't have my profit target out. I'm sorry, I'm thinking about the next trade. I didn't have my profit target out. And this thing washed down to 22.50 very quickly. And then kind of popped back up. And it never came back for me to take my profit. So I did take some at 24. I should have taken it at 23.50. I didn't. I should have taken it at 23. I didn't. And I ended up having to stop out here. So I was being a little bit greedy and could have caught this, you know, big move down here, but I didn't. Ended up stopping out. Got back in. Ideal entry. We pushed up a little bit, but still, we made a lower high. Eventually, we made a lower low. And I'm getting ready to put my stop in. And I accidentally put the wrong price in. Now, here's what happened when I put the wrong price in. My stop was supposed to be, it was going to be, let's see, I got in here. This is the same order. It just splits it, you know, how it matches the orders up. So sometimes you'll see it split. So here I got in at 23.69. My stop should have been like 24. All right. And I was going to put in 24.05 for my stop. But it was at 23. And so I had 23.05. And so it automatically filled. It automatically filled. I was putting in a sell stop. A buy stop. Lower than what the price was gonna be. And when it does that, it automatically fills, and that's what happened. So I have a habit of doing that sometimes, especially when I'm in a hurry. And here I was trying to flip back so I can get back in the room, and ended up covering it. So I waited for this to come back, and I got in here, and you can see this thing traded sideways. It traded in a channel for a long time. A really long time. And then finally we started breaking down, and by then I was worn out. I was a mess. I shouldn't have been sitting here watching this, but I was, and it caused me to take profit off here for no reason. There's no sell signal here. None whatsoever. We never did go above the 9. So there was no reason for me to lighten up here, but I was feeling the itch. I mean, I was feeling restless. I was feeling impatient. And I was like, I'm just going to take some off here so I could lock in profit. And I had to split 100 shares down here, which was stupid. You know, this should have been taken off here. This should have been my fill here. And then here I could have split and just held some shares to see how far it would go into the close. So my execution later in the day, as usual, is not as clean as it should be. And it's all because if I don't get a nap, a lot of times I can take a nap at lunch. You know, I take lunch from 11 to like 12:45, the big lull. So I can eat and usually take a nap. But if I do mentor sessions during the day or at lunch, I don't take a nap. So I don't get to recharge my batteries. And I tend to not be as patient. I try to focus more on staying disciplined, but just not being patient is one of the things that kind of messes with me. And then once I make a mistake, I realize you need to get yourself back together. And so here I did this great. You know, this was my target here. This was my target here. So I just set it and let it work and stop trying to sit here and micromanage it. But really nice trade. This is a home run trade for a small account. If you had a $2,500 account, you could have taken these trades with me and made $521. I mean, I had a $5,000 account. I could have traded this with 600 shares. I didn't. I went with 300. And, you know, most of you guys in here can relate to taking 300 shares of a $20 stock. Even if you only took 200 shares, you still would have made really decent money. This is a home run trade on, you know, a $20 stock. And when these happen, you try to find one or two of these a week, and then you mix them in with the other base hits. You end up with a really good P&L. And you end up with a good equity curve, you know, like we're having right now. So, you know, 521.69, nothing to sneeze at. Really solid day. And, you know, we're going to be ready to go into tomorrow with, you know, some confidence. But we can't be overconfident. We've learned that lesson before. We still have to come in being patient and letting the market dictate what it's going to give us that day. And then we take advantage of that. It's basically what it boils down to. All right, well, that's all I got for today. You guys have a great evening. And I will see you guys in the AM.